What's up, guys? I hope you guys are doing well. Welcome to another edition of the Befores and After with Capital Effects. So, in this video, it's going to be slightly more detailed than the other before and after videos, primarily because I want to go through a certain way to analyze the market. It's the same way that I always do it, but I'm just adding element to it. Also, just for educational purposes. Yeah, so guys, this is AUDUSD. I had this short trade set up. Actually, it was from here. I had this short trade set up yesterday, the 17th of August. So it wasn't like a fairly big trade. It was like 33 pips. Risked a total of 10 pips. Had a nice sorry, I had a nice 1:3 risk reward ratio, and then our target was this level here. If I just go to the daily, I'll show you why I put my target there. So it was a previous daily low. It was a previous daily low, so I extended it to the right. So I use that as my daily area of target. So, but I also have another one below here. It's extracted from this information here. This was the beginning of the year. If you guys were trading beginning of the year, I have noticed that there was a long spike. I think the spike was about 600 pips. It was actually kind of crazy. Let me see how long it was. It was about no, not 600. I'm exaggerating. Sorry, it was 273. But on other pairs, it was really long. Like on UJ, it was about 400, 500 pip spike. So this was also a daily area that I'd marked out as a possible area of target, and also it also coincided with price action afterwards on these areas here. So let's go back to the 1 hour time frame. All right, so this was yesterday's trade. So yesterday's trade, all the flip targets were hit. So, but I'll go through everything in detail. So let me just move this risk to reward tool to the side here. All right, so here's my setup. I identified that there was a high. This was around about 16 September. So this is a high, also a 3-pin information. 1, 2, 3. There was a high, then there was a low here. So I'll pull this up. All right, so this qualified. This qualified as a high. Oops, sorry. This qualified as a low. So this qualified as a high up here, making that A shape. And then over here, this qualified as a low in those regions up here. Just extend this like this. Okay, perfect. All right, so please excuse my drawing, guys. All right, so these are the shapes that I always talk about. That when I say like your highs and lows are identified by this shape here, like this. So always have this shape in mind. This spike alone, like that, this spike alone here wouldn't be enough for this this area here to be said that it's a low. We need we need further confirmations to say that this is a low. So we needed this price structure to break that previous low, to break it and close above it, and then give us signs of reversal. So if you know your reversal candles, that this is a RRT candle formation, which forms the low. So for example, on the high here, we have, so this candle alone will not necessarily mean that that is a high, because we need further confirmation, because this candle was pretty bullish. and by just looking at in isolation, we could have further bullish movement upwards. So we need further confluences to actually tell us that this is a high. And how do we know? So this was the first candle, second candle, which was a spinning top, and then the third candle, which was a bearish Maribaozu on resistance. So that now that this shape now it gave us the confidence to say that is a high. So that is a high, so that is a low. So that's one thing that I just want to get out the way, because I had many members, they're asking me, so how do I know that that is a high, or how do I know that that is a low? When do I know like how to draw my fibs? All right, so this was a high, then that was a low up here. So once you have these 2 pointers, that's actually what you actually need to be able to draw up a fib. So it's from the highest point to the lowest point right there. So we saw price move up into the fib. So here's another important aspect. You don't just take a trade because market just attempted a fib level. You always have to wait for market to give you signs of reversal around the fib levels for you to be confident to take a trade. So for example, some people would have jumped in because they just saw this candle hitting the 38.2 fib. Some would have jumped in because of this one here. But you could have jumped in on this trade because it was a tweezer top formation, but not necessarily just because. What I'm trying to say is that you always have to wait and see how they close around the fib level. So that would have been a nice valid entry, given that it was previous structure lows. So that would have been a nice entry up here. All right, so that could have been an entry right there. So price pull back and then it shot up again right on the 50 fib, and it sustained that resistance level for a while. So that was a big bullish candle, and that was a bearish Maribaozu. So if you took a trade up here, so if you took a trade at the close of the second candle here of this tweezer top formation, don't be scared when price does this, because that's how the market is. The markets always try to create panic and fear. So don't be scared when market does this. See? So, and also in terms of your stop loss, if you'd used this tweezer formation, so that is 67, then 77. So that's just assuming using a 10 pip stop loss. 10 pip stop loss is somewhere here. So you would even still be safe even if it was a 10 pip stop loss. Alright, so price went up, found a lot of resistance along these regions here, gave us a bearish Maribaozu. Price dropped again, it went up again to that form of resistance there. So I personally waited for 50. I waited for the 50% retracement of the fib, and then when they gave me that bearish Maribaozu, when they came back, so I'd missed the trade initially here, but when market gave me this bearish engulfing candlestick formation, I waited to take a trade at least 50% of the big candle. So my entry was here. Then my stops were fairly tight. I think I'd risked about 10 pips in total on my trade. And then these are my targets: minus 27, minus 61.8. But my target, like I said, I used this previous low here as my target. So that was my target, and then I took my sell trades there, and then I just let the trade run out. So this trade played out in 1 day. So it played out 1, 2, 3, 4, 5, 6, 7 hours. So it took 7 hours for the trade to play out. So after they hit my target, price pulled back all the way back to these areas here. But I was not aware that price was back here. I think it was around about like 9 o'clock at night. So I was not in front of my laptop when price was here, and then I woke up in the morning, price had fallen back again to these levels here. All right, so but currently the overall direction of this pair is is a downward trend, and I'll show you just now is a downward trend. Alright, so let me just remove this restore tool. Let me just actually move it to the side. So in terms of price structure, this is a high, low, high, then low. So now coming back to our normal, what we normally know of price structure, there's a first drop, and then third one, then pull back, and then another extension going downwards. So in terms of a price structure, just get this. So that's represented by that, and then that is represented by this, and our entry was here. So our entry was here. Oops. Our entry was here. Then our target was here, and then we saw price come back up. So price came back, came back up to here. So now we have equal highs, and then price dropped again on our lows, and then now we have equal lows. So for us to continue on a downward trend, we need to see price breaking this area of support here. So currently at the moment, what's happening now, I'm waiting to see what price does at these levels up here. And also I'm also having in mind that we had, so this was our previous swing point before that drop here, so this one here. So I'm expecting to see any signs of reversal at this regions here. So I'm expecting to see any signs of reversal here. I'm expecting to see signs of reversal here to take a further sell. I'll see what price does here, but if price breaks it, then we'll definitely be setting sell on a downward trend, because we have equal lows here, and we need to have a new low to break this one to validate our downward trend. So as we're currently speaking, or at the moment rather, if I draw my flip from here to here, so also remember, bearing in mind these shapes, bearing in mind these shapes here. So I have a swing high, then I have a swing low. So let me just use this one actually, that low there. So it's part of that shape here. So what I'm waiting for now, I'm waiting for price to shoot up. At least, well, I'd love to see price come to the 61.8, but if they don't, I'm waiting to see what price does between this zone here, between the 50 and the 61.8. That's what I'm waiting for price to do, or rather I'm waiting for signs of reversal around these regions up here. So just to clarify, like, there's no like specific reason like to just only take trades at a specific fib level, but what's important is to always see how the market closes at any specific fib level. So the 38.2 is not more special than the 50 fib level. The 61.8 is not more special than the 50 fib level. What is important is how does price close at those levels. If you see a nice price close at 38.2, you should take a trade. Don't say, no, it's not a 50% fib level, it's not that special, I'm not going to take it. You're going to lose out on trades. So what's important really is to always notice how price closes around the fib levels. So having said that, so what I'm waiting for price to come test this area here because it was also in this region of this previous low point. So if price comes up and up in this box here, or even if price closes bearish along the regions here on 38.2, that's also perfectly fine. All right, so, and also why I would also say that is because of this. So we have like a strong area of resistance here, resistance. So we could actually see price being stopped by this barrier here. So if they go above it, your next, oops, sorry, if they go above this region here, so if they don't close around here, your next best place for them to close at is somewhere in between there, and then from there, we could see price fall even further and lower. All right, so let me just pull up the risk to reward tool. So risk to reward tool, that I'm looking. So I said any areas, any trades taken from around this area here. So any entries from these levels here, any entries from these levels here. And in terms of target, I'd be going for the minus 61.8 on this one. And then in terms of stops, 10 pips above the 78.6, so it's 68605. So I'll go for 615. That's 7705. Right, sorry, 66775. Okay, perfect. So that'll be my risk to reward ratio. So I'll be risking total 17.8 pips, gaining 45. But also, if you remember from earlier on, when I gave the that this was the previous area, so price could even actually drop even lower to come back to this previous daily level here on about 99, sorry, just over 100 pips, just over 100 pips. So that's my view on AUDUSD. So, and also I said that I'd zoom out to ensure that we are currently in an area of resistance, a pretty strong area of resistance up here, pretty strong area of resistance. So that's swing high, swing low, swing high, and then we're expecting price to fall over, even go further downwards. So, but I just wanted like for you guys to see how like to break down a specific pair. So it shouldn't really take a lot of time. You always use the available tools that are given to you. Like for example, in fact, let me just go back to the 1 hour here. For example, we have a 3-pin formation 1, 2, 3 for the retracement. Let me just bring this back up. So we have a 1, 2, 3 3-pin formation for retracement, and then what we basically do now is now just play the waiting game. When we play the waiting game, oops, we'll play the waiting game. We'll play the waiting game to see what price does for us at these levels there for a short trade. Alright, so let me just remove all of this. Okay, just give me a second, guys. I just want to remove. Alright, so In closing, I just want to highlight one thing. So when you're analyzing a pair, always look for what they give you. Never make up things like for yourself, to validate what you think is happening in the market. So I'd always say like trade what you see. So don't trade what you think, but trade what you see. So always use the tools available. Use your foot tools, use the horizontal lines, use the trend lines if you have to. But what's really important is having the ability to study price action for what it is, and to always like follow price structure. So that'll always play out, and that I think will live longer or live beyond any indicator, because indicators are made from price, or they derived rather from price action. So that's AUDUSD, guys, and I hope I clarified how to like break down a pair by studying price, by identifying your reversal candles, and also using fibs as well, and the importance of always taking trades after candle closes. It's so important, guys. Never be in a rush to take trades like prematurely. So never have FOMO in the markets. You always have opportunities. As you can see now, the candle just shot up. So, but I am really waiting to see how this pair plays out. So if they close on the 38.2 bearish, I'll take trades from there. If they come close bearish on the 50, I'll take trades there. So, but I'm gonna update this on the members Telegram page, just to keep you guys posted. So I hope this video does like bring a lot of light into your trading and will help you greatly in your trading. All right. So trading should be simple. The only hard thing really is after placing a trade, what do you do after placing a trade? So the best advice that I always give is that after you take a trade, well, this is assuming that you use the right lot size and the right and proper risk management. After you take a trade, you place your stops, you place your take profit, and let your trade breathe. So that's the best advice that I can give anyone who's maybe having problems with what I do, or after taking a trade, or who feels that trading is hard. Okay, so trading itself should not be hard. It actually should be easy, because you're waiting for the setups to play out, and you're taking trades based on the setups. Anything else that is beyond your control is really pointless to fuss over, because it's really out of your control. So the best thing to do is to always wait for the market to give you signs of reversal and take your trades from there. So I hope this video was definitely helpful. All right, so I'm going to be sharing a lot more around like these topics with different pairs, just to explain to you like the crux of everything, how to analyze, how to break down a pair, and how to trade it confidently. All right, so thanks so much, guys. From my side, thank you so much, guys, for tuning in and for believing me to be your mentor. All right, so I believe that you guys will do extremely well in your trading. All right, so this is the kind of support that I'm willing to give anyone, who needs help, and then needs assistance in terms of support when it comes to trading. All right, guys, thanks so much and happy trading. Hi traders, how you guys doing? Welcome to another edition of the Before and After with Capital FX. Right in front of me is the AUDUSD aftershot. So I had sent out analysis of the before shot yesterday, which was Wednesday the 18th of September, and this is the aftershot. So the trade played out as is. If you remember, in the before shot, I had this small buy trade, which was a hedge trade of the overall trend, and then I had expected price to come to 68540. So I'd expected price to come to here, actually, to come to 540 and then to drop from there. So the trade played out exactly as is. I'll just go through the breakdown of the pay. So the trade played out in about less than 24 hours, because this trade setup was posted in the afternoon, and we had some FOMC news to help push price downwards to complete our structure. So I later on updated my risk to reward ratio, because at the time when I was projecting this whole setup, price hadn't played out up until to these regions here. So I was expecting price to trace between this block here, but price indeed actually came and retraced where I'd expected it, hence the change in the risk to reward ratio. So the initial risk to reward ratio I think was about 1:2.50 something, where I was planning to risk 33 pips and then to gain just about over 50 pips. Alright, so in this risk to reward ratio, since price had played out and I waited for price action along those regions here, I later on updated the risk to reward ratio. So this is a much more cleaner, tighter one. So total risk about 13 pips risk, and then targets were about on 66 pips. So just pushing up the risk to reward ratio to 1:5.3. And then I got that risk to reward ratio by using the flip tool. So this was point A, point B, point C, right on the 61.8. So when price was there, I clicked on the sell button, and then I had my stops fairly tight just above that key area, previously support and became resistance. And then I used the 100 minus 100 as my fib target. So this is pretty much a good trade. It just took one day to play out, or rather less than 24 hours to play out. I was in a lot of trades. USD is also playing out. I know they pulled up slightly higher, but I'll also update on that. I got stopped out on GBP JPY earlier on the week. I got what other pair was I trading? I got stopped out on my Euro odd short. Well, I was in an overall trend, but I was going against the trend, just scalping a few short trades. So my expected target for Euro odd for the short trade was 50 pips, also a head trade, because I was long from the bottom. I think I was long 145 pips. Then I wanted to just get a quick 50 pips retracement, but they only moved about 30 pips, and then they pulled up even higher. So, but I was out of my long trade on 145 pips because I didn't expect them to shoot even higher. But it's all good and well, you know. But so let's get into this pair, which is AUDUSD, and it's a very good trade. I hope you guys took the trade setup. It was sent to the Telegram members group. Alright, so let me just go through this trade setup. So let me remove this. Let me remove this as well. Alright, so in yesterday's post, I was going through price structure. So this is what we had yesterday. We had a high there. Remember our shape? We had a high, yeah. We had a high, and then we had a low, and then price came to give us, or to come make new lower highs. So if I just zoom up nicely, okay. So price has been in a fairly downward trend. So that is a high, that's a low, low, that's a lower high. Then we made a lower low, and then we came and made equal lower highs, and then we dropped further to come make equal lows again around 0.68312. And then yesterday's setup, I'd said that I saw this strip information and took a long trade to the region here, because this one was a area of this was a swing low. This was our most recent swing low before that drop here. So I'd marked that out as a potential area for where price could come back. So price indeed came back exactly to that area. So I hit my TPs, well, my long TPs along that area here. And then price immediately after that reversed right on that area, which was the 61.8 in the fib, if you saw earlier on. 61.8 in the fib, and then price dropped all the way downwards. So this was a high, that's a low. And then let me just clone this tool. And then now we had a new high low formed along those regions there for price to drop onwards. So my trades was just basically taken based off of price structure. This was a high low, so I was waiting for the high low to be formed, and then when they gave me that hammer candle at that area that I'd marked out, as soon as the candle closed, I took my short trades, and then all my targets were met. Well, we had FOMC yesterday. I think it was this candle. I think it was this candle here. This candle here, which pushed price further downwards and all the way to our target. So in terms of our price structure, we have now completed our cycle. Oops, sorry. Yeah, we've now completed our cycle. So this was our rundown, retracement, and then lower high, and then off to our next target. So this is a fairly good trade. In terms of risk to reward ratio, it's pretty decent. 1:5 risk to reward ratio. And then risking about 13 pips in total to gain 66. So I always try to use a really tight stop loss just to reduce my risk exposure, which also allows me to go in slightly aggressively. But obviously, I do always consider risk management in all the trades. So I think in total, I'd risked about less than 2%, or actually less than just about 1% of the account size on that trade, and then to gain 66 pips from risking 13, so which I think is pretty good. Right, so but I hope the before video really helped you guys to also just establish a way of trading. I always try to keep my charts clean and simple. I always also like to just keep my videos as plain as possible because I don't want to overcomplicate anything. And I believe as well, when you guys get like clarity from whatever I'm saying, you're able to apply it properly in your own trading. So yeah, guys, I'm really happy about this trade. So they played out to the T, and we do have some more further we have more bearish runs on this trade, or on this pair, and we could see some further downward movement. So let me just explain what I mean. So we now have a new lower low, and then let me just go to the 4 hours. So we came from these regions here, and then we are expecting price to fall even lower along those ranges here. So we have a lower high, and then we have a lower low. So just apply my fib. There we go. There we go. So we could see some price action pulling up, or we could see some bullish price action rather. Just pull up along these regions here. Let me smoke that out. Some price pull up here. I'll just come to the 50 to sort of tap that spike here. So it's much clearer actually on the 2 hours, on the 1 hour. So I'm expecting price to come back here. I'm expecting price to come back just above the 38.2. Maybe they'll come leave a spike here, and then they'll drop further down. They'll drop further down. They'll drop further down to create new lows. They'll drop further down to create new lows and possibly beyond and come even lower. So, but I am out of this trade because they hit my TPs. So, but I am definitely looking for more short setups, but I will update on the Telegram members group and to tell you how this pair goes. All right. So in total, in summary, it was a 1:5 risk to reward ratio, updated from the original shot because price hadn't played out to where I'd expected at the time. So I was making a projection at the time for price to be playing around this box here. So price indeed came to that area here. So in summary, risk to reward ratio 1:5, risking 13 pips to gain 66 pips. Fairly good trade in terms of risk to reward and risk management. It's a very good one. I risked about 1% of my account. So I really hope this video did help, and it also brought some clarity when it comes to using fib, being able to study price action, and also applying your candlestick recognition. So I hope you guys have a great trading week, and I hope this video will indeed help you in your future trading. Thank you so much, guys.